Gold traded in a very narrow range last week, failing to stay above 20-40-42 levels, the critical resistances, as we have discussed in our weekly review last week. At the same time, it has beautifully respected the trend line on the downside, failing to stay below 2010 levels. What does this mean? Can we expect a break in gold prices in the coming week, as it is still forming a nice flag here? Can we expect it to break out on the upside, or there is further crash awaited, which can take the prices lower? What is going to be our strategy trading gold next week? We will see with the help of charts and indicators. If you're new to the channel, subscribe to the channel to get the latest updates. Do like, share, and comment. Your every action matters to me a lot. And yes, press the bell icon to stay tuned with the twice a day updates for gold, which I share first with the Asia and Europe session, next with the US session. Do watch both. Let's start. First, we'll look into charts and indicators, and towards the end, I will give you the trading levels and strategy. Watch till the end. And yes, if you have not joined the channel memberships, do join the channel memberships to get the additional benefits. Let's start. First, let's have a look at the monthly chart. See, the month is about to end here. Only 3 trading sessions left in the coming, and it appears it is not willing to end the month in green. Yes, though it has closed at the support levels and hence a bounce back cannot be denied here. However, right now the candle is in turning red. Also, if you look at on the monthly charts, the 3 months back we have seen a very strong bullish candle. Then you can see diminishing body size, and the last candle in the month of December was a swing candle with a very small body, which suggested that the bullishness got diminished. Also, the prices are trading with divergence from the 20 period moving average, which can call for it to convert. I will definitely watch out for where this candle closes towards the end of the month. Any closer above 2060, 2065 is clearly a sign of reversal, and then we can expect that prices are going to rally in the month of February. Yes, that will be one of the expectation if the prices, if we see the monthly candle closing above 2060, 65. Also, if you notice, it has respected the lows here. It has not yet breached the lows. Yes, beautifully aligning to the trend. Also, one must note that preceding swing candle is still gives a scope for gold to continue with the rise here. Now, let's have a look. See, stochastic on the monthly charts have hit an high and now looking downwards. Though on the KDJ, still there is a crossover which is yet to be seen. I will definitely watch out for where this month closes. Also, now look at the MACD on the monthly chart. See, this was the first wave. The second bullish wave has started. But look at the slope here. The slope here and here are different. The drop was sharper. The rise is gradual. Suggested that this is under retracement. However, despite under retracement, it has achieved the all-time high levels here for gold. Now, it has started to converge. The candle size is diminishing. Remember, it has not yet crossed over. It still has the scope for it to continue with the rise on the upside. RSI is trading at a comfortable zone, neither bullish, but right now it is looking downward, suggestive of bearishness. Coming to the weekly, now this is important on the weekly chart. See, yes, it has respected the trend line on the downside. Also, we have seen the last week it has taken the support from the 20 period moving average, and now it is trying to take the support and consolidate its position. Also, one must note that the bearishness has diminished here. The last week we have seen diminishing body size suggests that the candles and the bearishness getting diminished here, which means that signs of a reversal possibility of a rise exists. But for that, we need to wait for gold to break beyond 20-40-42 first. And if you see gold is staying beyond 20-40-42, the next target is going to be around 20-50-52, the next resistance. And if at any point of time gold is seen trading above 20-60-65, consider that we are going to look forward to a rise and a rally towards 2100 again. Yes, 20-60-65 is the level it needs to break in order to confirm a reversal and a rise. Now, on the weekly charts, what has happened? Look at the movement here. First of all, it is beautifully trading in this bullish channel. Look at the movement: rise, retracement, rise, retracement, rise, retracement to the bottom of the channel. It is forming head and shoulder on the inclined path, but it is still in the upward trend here. This is something which you should note. It is still in the upward trend, and thus it needs to break on the downside first below 2010 and then below 2000 levels. Yes, at any point of time, prices staying below 2000 levels can lead it towards 1980 and lower levels. One must note on the daily charts, I will come back to this, there is a gap left which is to be filled. Not necessary that it is going to fill in a quick time, but yes, around 1835.45. I'll show you on the daily charts. Right now, it is taking the support from the 20 period moving average. Look at the stochastic, it has seen a drop here. MACD. MACD traded bullish, it is tried to converge, it is not yet crossed over. Remember, it has not yet crossed over, which is again a sign that it can continue to diverge one bullish candle and then it will be back to the path of bullishness. Look at the waves here. First wave, second wave. See, higher lows are seen here, higher highs are seen here. It is trying to converge here, but it has not yet crossed over. Thus, the next candle is going to decide the fate of gold in the next few weeks. There is a possibility that gold may continue to rise from the current levels, and I'll be looking forward to it. But right now, it is not in a mood. We have to wait for the critical levels to break past by. RSI looking downwards. Coming to the daily. Likewise, on the daily charts, for last couple of months, we have seen gold beautifully respecting the levels here, and on the daily charts now it is 2 to 3 times failed to break below these levels in last couple of weeks. We have seen it respecting beautifully this channel. Let me show you something here. You can see it tried to break it for once but failed to close. None of the candles closed below these levels, and it is beautifully respecting this channel. Thus, first, it has to break beyond 2040-42. In fact, in the coming week, 2030-32 is what you should look forward to first, and then 40-42. If these two levels are taken, we can consider this for a reversal. Treat this as a symmetrical movement, drop, retracement, drop, double bottom, and a rise here can lead to higher prices, where one can look forward to 2060-62. And after that, where is the highs of the channel? Highs of the channel are far above at 2100, 2150 levels. 2100, 2120 is the first resistance zone. Then we can look forward to the all-time high levels. But right now, the important observation here is the resistance it is getting on the downside, or the support it is getting on the downside. That is very, very important. This calls that if a breakout is seen on the downside, we have to be alert, else in all probabilities it can bounce back. Moving averages have started to converge, it has not yet crossed over. RSI looking downwards here, signs of bearishness. MACD, and if you see it converging and crossing over, remember a rally is due in gold. It has retraced, see the rise, retracement to almost the 50%. Look, 30 and minus 10, almost it is retest now 60%. And there is a possibility of a crossover from the current levels, which could lead to higher prices. RSI flat. But remember, right now it is not showing much strength. Coming to 4-hour charts. Also, one must note that 31st January is the date when the Fed's interest rate decision will be there. And moreover, as the market is already anticipating no rate hikes in this season, at least in this month Fed meeting at least, but market will be definitely watchful of the comments from the Fed chair Jerome Powell. Definitely this will bring further volatility, and that will give the indications on the path which Fed is going to take. Any hint of aggressive rate cuts in the coming meetings will definitely prove out to be a boon for gold for further rise. Now, if you look at the 4-hour charts, after the sharp drop, it is retraced and it is still yielding higher lows, higher highs. Remember, it is in the path of a retracement, not a reversal. A reversal is confirmed once it breaks out beyond 2040-42 zone. It has to stay above these levels in order to confirm a reversal. Stochastic has come to oversold. MACD is almost trading with negligible divergence, and RSI running flat. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading strategy for the coming week. And before I give you the key levels and the strategy, if you want to learn this art of trading, join my 28th mentorship batch commencing on 29th of January. Register yourself now. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. And if you want to join the Signals channel on Telegram, reach out to me. Yes, you can also get the details on my platform forexfunda.com or by joining my free Telegram channel. The platform Forex Funda has much more information available. The live charts, the economic calendar, and the community of traders. Along with that, you also have an option to book a call with me if you need any consultation or guidance before the imminent data releases, or if you are stuck up in any position. And this call is completely free if you are part of our webinar series. Do register for. First, let's talk about the levels to buy. I will recommend you to buy gold in the coming week at 2026 level. Be watchful of 2030 32 first resistance zone, and if you see it is staying above 2030-32 zone, Then also we have to wait for it to break beyond 20 40 42 zone. If gold stays above this zone any point of time in the coming week, remember the chances of a breakout on the upside will be very high, where the next milestone, though the stronger milestone, is about 20 60 65. However, it needs to stay first about 20 54 55 levels, the first resistance level. And if it stays above this, I will recommend, or I will expect it to move towards 20 62.5. Staying above this, one can stay bullish, one can expect a stronger rise which can take the prices towards 20 85 and 2120. Yes, beyond this zone for the coming week and for the month of February as well, we can look forward to higher prices, anticipating it to move higher towards 20 85 21 20. Yes, as and how gold breaks these levels, the bullishness will continue to increase, and once it stays about 20 60 65 zone, we can say that the month of February also gold might likely to remain bullish, where it can try to head towards 2100 2150 and higher levels. Possibility will be very high. I will be definitely watchful of where it closes this month. On the downside, a selling entry I will recommend here at 2014 levels, but then also you should wait for it to break below 2010 08 levels. This is the first support zone, and below which you can expect 1997. If gold breaks below 1997, remember a sharper drop towards 1980, and once it stays below 1980, that is the time you can say that in the coming month as well, we are going to look forward to a drop towards 1950 and 1920 levels. The possibility of this also, as and how it breaks these levels in a series in succession, yes, you can say the bearishness is definitely going to increase with each of these levels passing by. More bears will settle in, and then prices are going to trade bearish. But again, I'm for the coming week, as long as 1997 is not taken on the downside, we are not going to treat gold as. Take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch webinar series, Signals channel. Join the free Telegram channel, or visit the platform forexwonder.com for live updates. Do not miss the twice a day analysis. Yes, with the Asia and Europe session first, and then with the US session, these two analysis keeps you updated with the live market movements. Do watch both. Thank you very much. Have a great profitable trading week ahead. Thank you.